Hello learners, in this video I want to take you through control accounts. I want to show you how we can quickly master our control accounts, and we're going to start from the very beginning. I tried to prepare something for you, so let's go straight to the beginning. So this is a comprehensive O-level accounting masterclass covering the purposes, structure, ledger entries, and some practice questions based on Cambridge syllabus. And so we want to take you through how we can answer control account questions. And what is a control account? What is it? What's its key purpose? And why is it important? All right, so let's start. Right, so the first step is understanding why control accounts are essential in bookkeeping systems. Let's start from the beginning with the definition. A control account is a total account maintained in the nominal general ledger that summarizes a large number of individual personal accounts in subsidiary ledgers, sales ledger or purchases ledger. All right, so a control account is basically a total account, and it summarizes the activity that will be happening in either the sales ledger or the purchases ledger. All right, so there are two main types of control accounts. You have the sales ledger control account, and it summarizes all the trade receivable debtors, balances and transactions. And then you have the purchases ledger control account, and it summarizes all the trade payables, creditors, balances and transactions. All right, so let's quickly move on to the next page. What's the key purpose and benefits of control accounts? First one, we have arithmetical accuracy. Control accounts help us to prove the mathematical accuracy of individual personal ledgers independently from the trial balance. So an accountant or an auditor can use the control accounts to verify that the sales ledger or the purchases ledger have been drawn up accurately. Right? The next point is fraud prevention. These help to reduce fraud by segregating the ledger bookkeeping duties among different staff members. All right, so you might have your sales ledger being handled by an accounts clerk, and same with your purchases ledger being handled by another accounts clerk, and then the control account being maintained by your accountant. Right? So it's when those duties are segregated, it prevents the likelihood of fraud. Right? Then the next point is instant information. It provides immediate totals of trade receivables and trade payables for financial statements. Next point, error location. Assists quickly in locating balancing errors within individual accounts without inspecting every ledger page. Right? So you can quickly locate errors when you are using your control account. Right? Let's move on. Let's go on to the structure of your control accounts. Remember, there are two main types of control accounts. There is the sales ledger control account. So in this video, I will cover mainly the sales ledger control account. Then we'll do a complete worked example. Then in the next video, I'll present a purchases ledger control account. Right? So on the screen here, we have a sales ledger control account, and assume that this is a T account. Right? On the left hand side, that is your debit side, and on the right hand side, that is your credit side. And on top here, it says in the dark blue, it says on the debit side, it says increases the amount owed. Right? So on the left hand side, of your sales ledger account, you are looking for at items that can increase your debtors balance, and you are looking for items that can increase your debtors balance. And on your credit side, you're looking for items that can reduce your debtors balance. Now remember, debtors are people who owe us money after we have sold some goods to them. So we sell to them on credit and then they owe us money. So if we're saying amounts that increase the debtors balance, we are looking at things like credit sales, and when we make more credit sales, that increases our debtors balance. When an amount is dishonored by the bank, when a check is dishonored by a bank, it increases the amount of debtors that the debtors balance that we have. And interest charged on overdue accounts, if we charge interest on our debtor accounts, that increases our debtor balances. And then refunds given to credit customers, that also increases our debtor balance. Then on the credit side, we have things that reduce our our debtor balance. And on the first one, we have opening credit balances. So for example, if a debtor overpaid his account, his account will have a credit balance, right? So if a creditor overpays his account, that account will have a credit balance, and we have to show it in our control account. And then the next one is when our debtors make payments to us for the amounts they owe, that reduces the amount of debtors that owe us money. Then if debtors return goods to us, or if we issue credit notes for damaged goods, etc., that reduces our debtor balance. And then also we have discounts allowed. If we give discounts, cash discounts to debtors who pay promptly, that reduces our debtor balance. And then lastly, we have bad debts and contra entries. Bad debts are amounts that cannot be recovered, and those reduce our debtor balance, and the same goes for contra entry. So your control account will be a T account like this. On the left hand side, you'll have amounts that increase the debtor balance, and on the right hand side you'll have amounts that decrease the debtor balance, right? So before you attack any question on control accounts, you must have this visual picture of how to answer those questions. Right, let's move on. Like I said, there are some special adjustments. Like let's go into the exact textbook definitions of those adjustments. The first one is a contra entry. A contra entry is more like a set off. And if you have someone who is both your customer and your supplier, right? Right, let's read here. It says, occurs when a business both sells to and buys from the same person. The ledger balances are set off against each other, reducing both control accounts simultaneously, right? So here it's a situation where someone is both creditor and supplier, all right? Then the next one is a dishonored check. A check previously received from a customer is rejected by the bank due to insufficient funds. This reverses the payment entry, increasing the debtor's balance on the debit side. So this one, I believe it's self-explanatory. And then the next one is credit balances on the sales ledger control account. Right? Normally debtors have debit balances. A credit balance can occur due to customer overpayment, advance payment, or returning goods after full settlement. All right, so that is a credit balance. Right, so let's let's quickly go into some questions now. So now I've given you the basic structure of a control account. Let's go now into some questions and see if we understand, right? So these questions are coming with answers, so that if you come meet them in a multiple choice paper, you will be able to quickly solve them. Okay, the first one is, where is the discount received recorded in control accounts? Where is the discount received recorded in the control accounts? Remember, we have two control accounts. We have the debtors ledger, we have the sales ledger control account, and we have the purchases ledger control account. And in the purchases ledger control account, that's where we record our discount received. Okay, we'll cover more on the purchases ledger control account in the next video. Second question, why does a sales ledger control account not contain a provision for doubtful debts? And the answer, because a provision does not affect an individual debtor's actual account balance, right? That is the reason. Then the next one, state one reason why a credit balance can appear on the sales ledger control account. I think we discussed this one. And the answer is a customer overpayment or payment made in advance. Question 4, which book of prime entry is used for bad debts written off in control accounts? Which book of prime entry is used for bad debts written off in control accounts? And the answer there is your general journal. Your general journal. Right? Number 5, what is the primary formula for calculating trade payables payment period? Right? I believe this you get it from chapter 22 of Catherine Cookham, where we looked at ratios and things like that. So the answer is trade payables divided by credit purchases multiplied by 365 days. All right. Question 6. How do contra entries affect the purchases ledger control account? They appear on the debit side, reducing the amount owed to suppliers. Question 7. State one disadvantage of paying credit suppliers earlier than necessary. The business is deprived of cash liquidity earlier than needed. Okay. Where do sales returns appear in the sales ledger control account? Answer, on the credit side. Sales, remember we said sales returns reduce our debtors balance. And then question 9, state two benefits of dividing ledgers into sales, purchases and nominal sections. Answer, work sharing among staff is easier and is easier for error location. Okay. Question 10, what ledger contains accounts of individual credit suppliers? What ledger contains accounts for individual credit suppliers? The answer is purchases ledger, or this the purchases ledger. That's where you get your individual accounts for credit suppliers. All right, right, right. So we've covered the theory side of control accounts. Now let's continue with control accounts, and again we said we are focusing on the sales ledger control account. Let's get straight into it. So we want to look at a practical example of how to answer a sales ledger control account question, right? So here's a sample question. It's by Vijay Singh, and it says Vijay Singh maintains a full set of accounting records and prepares control accounts at the end of each month. He provided the following information. Debit balance on sales ledger control account 475, sales journal 590, sales returns journal for 46, cash sales 614, checks from credit customers 387, checks paid to credit suppliers 469, and then there's a dishonored check of 26, discount allowed 13, discount received 34, bad debts written off 32, and then interest charged to credit customer 8, and then there's a contra entry of 150. So what you're supposed to do when you see a question like this is you're supposed to tick all the things that you know are supposed to go into the sales ledger. So for instance, if we look at the top here, the debit balance of the sales ledger control account of 475, this goes into this sales ledger control account. The sales journal, these are credit sales of 590, these go into the sales ledger control account. The sales returns journal 46, this amount goes into the sales ledger control account. This figure of which says cash sales of 641, this doesn't go into our sales ledger control account. Remember, cash sales don't go into the sales ledger control account because cash sales do not increase the amount of debtors. Only credit sales increase the amount of debtors. The next one, checks received from credit customers. This goes into our sales ledger control account. The dishonored check of 26, this goes into the sales ledger control account. Then the amount paid to credit suppliers of 461, we don't include this in our sales ledger control account. Discounts allowed of 13, this goes into our sales ledger control account. Bad debts of 32, this goes into our sales ledger control account. Interest charged, yes, and then the 150 contra entry, yes, and the 21, yes. So you have to pick the items that are going to go into the sales ledger control account that your question asks you to prepare, right? So let's go and take a look at prepared the sales ledger control account. The sales ledger control account for April 2015, we're saying the balance BD 475, we put it on the debit side. Credit sales, we get our credit sales from the sales journal and they were 590. The dishonored check, it's of 26, it goes on the debit side. Interest charged, it goes on the debit side. And then on the credit side we have our sales returns. So remember, on the debit side we're looking at amounts that increase the debit balance, and then on the credit side we're looking at amounts that reduce the credit balance. So on our credit side we have sales returns 46, checks received 387, discounts allowed 13, and bad debts written off 32, and then the contra entry of 150, it also reduces our debtor balance. And then there's a balance of 21. The question tells us that there is a credit balance of 21, so that credit balance, if we have to put it on on the debit side, so that when on the opening period for the next accounting period for the next month, it appears as a credit side on the credit side of the control account, or as a credit balance PD for the control account. And then our credit balance PD becomes 490 after we subtract the totals for both sides. All right, so that's a practical example of how you draw up your sales ledger control account. All right, so now we want to have a practical example on how we could have answered used this information to answer an exam type question, and we're going to look at this question here. This question was taken from this paper that you wrote in the mid-years. It's accounting paper 2, 04522, October, November 2021, 1 hour 45 minutes. Right, so most of you wrote this paper, but most of you had challenges. So you just want to go over this paper once again. All right, so Aisha is a trader who maintains a full set of accounting records and prepares control accounts at the end of each month. She provided the following information for the month of August. On 1 August, sales ledger control account debit balance 9,800. Sales ledger control account credit balance 420. Purchases ledger control account 7,700. So immediately what you need to do here is you look at the question, and you can see that it has a mix of information. It has information that relates to the sales ledger control account. It also has information that relates to the purchases ledger control account. So your task, first of all, is to pick and identify those items that are supposed to be in the sales ledger control account, and those items that are supposed to be in the purchases ledger control account. All right, the question says here, prepare the sales ledger control account and the purchases ledger control account for the month of August. So it's asking us to prepare both the sales ledger control account and the purchases ledger control account for the month of August. So let's go ahead and prepare those two accounts. Start with the first thing. They tell us that there is a balance BD, and that balance BD is we're going to put this balance BD on the debit side. It's 9,800, right? And then there's also a balance CD, or rather a balance BD on the credit side, which is 420. All right, so that's how you handle those two balances. Right, so remember this 420, we're saying there is a customer who overpaid, or rather there's a debtor who overpaid, and we owe that debtor $420. Right? We discussed this credit balance when we're doing the theory section, where we said this when you see this credit balance on the sales ledger control account, it represents an overpayment. Okay, so let's go on to the next thing. We are told that there are sales, right? There are sales. The sales are worth 88.50, right? So this is the figure for sales, and then let's continue. Okay, let's let's go up and see. Right, we're told their credit sales 8850, and then we don't credit purchases, they don't go into our sales ledger control account. Cash purchases don't go into our sales ledger control account. Receipts from customers 82,100, that goes into our sales ledger control account. So we come here and then we just say receipts from customers, and the amount there is 82,100, right? Alright, then we go back and look what else is required. Payments to credit suppliers, that goes to the purchases ledger control account. Discounts received, that goes to the purchases ledger control account. Discount allowed of 900, that goes to our sales ledger control account. Irrecoverable debts of 300, that goes into our sales ledger control account. Sales returns 2,400 goes into our sales ledger control account. So let me quickly add those. We're saying discounts allowed, discount allowed, it's 900. And then the next one we have recoverable debts, irrecoverable debts, $300. And then next we have sales returns, that's 2,400. And then next we have contra entry. Our contra entry is 150. Right, and then on the debit side here we have interest, which is 90. Then we have a balance CD. Remember, this balance CD simply means that there were people who overpaid their accounts, which we owe money, right? So we owe these people money, and the number of people there is 350 PD in the next accounting period. And then here we need a balance CD, right? So first we add up our figures, and if we add up our figures this side we should get 99,090, and so we say 99,090, and then our balance CD here is simply the difference between this 99 090 and all these figures here, right? All these figures, that's where we get our, when we subtract those two, we get our balance CD, right? So then in the next accounting period, you will have balance BD 10,500. Then you'll have balance 350. Right. So this is how you were supposed to handle that question.